In the full year to the 31st of May 2025, the Henderson Smaller Companies Investment Trust NAV fell 5.1% and the share price fell 2.3% on a total return basis, a disappointing performance against the index, which rose 5%. Base rates staying higher for longer, rising bond yields, and the uncertainty caused by the Labour government's budget in the UK and Trump's Liberation Day announcements in the US continued to have a detrimental impact on the real economy and the earnings and valuations of our predominantly pro-cyclical and interest rate sensitive portfolio. We are, however, pleased to declare a final dividend of 20.5 pence, bringing the full year dividend to 28 pence, which represents 3.7% growth year on year and is a reflection of continued strong cash generation in the underlying portfolio. During the period under review, the fund suffered from a profits warning in Next 15, a market services and data communications group which was impacted by a loss of a material contract in Saudi Arabia and weakness in tech spending. The company is currently undergoing a change in management, and the board has committed to unlocking shareholder value through the potential disposal of parts of their business. Elsewhere, Impax Asset Management suffered from continued outflows and the loss of a major client mandate, which put significant pressure on earnings. Our biggest positive contributors came from our long-standing holding in Balfour Beatty, an international construction support services and infrastructure investment, whose shares have performed very strongly on the back of strong order book growth in its construction and support services businesses, as well as continued commitment to cash returns to shareholders. Sigma Rock, the owner and operator of lime and limestone quarries in Europe, saw strong earnings upgrades driven primarily by synergies extracted from their transformational acquisition of CRH's lime assets, and optimism around an end market revival in Europe following German debt brake reforms. We continue to find exciting new investment opportunities and added holdings such as Genus, a global porcine and bovine genetics supplier who recently gained FDA approval for a gene-edited disease-resistant pig in the US, and Trustpilot, an open digital platform for consumer reviews and insights. We also added Pinewood Technologies, a provider of cloud-based enterprise software for the car dealership industry, which is only just starting to make inroads into the vast US market. We bought Currys, an omni-channel electronics retailer in the UK and Nordics, which should benefit from a tech refresh cycle 5 years on from the pandemic. We also purchased Spire Healthcare, a leading hospital group in the UK, whose expansion of mental and occupational health clinics should drive strong growth and improve returns in its business. We simultaneously disposed of holdings in CLS, Morgan Advanced Materials, Midwich, Synthema, and Videndum, where we had concerns over their balance sheets in the context of delayed market recoveries. The portfolio continued to benefit from the strong takeover momentum in this part of the market, which saw our holdings in Alliance Pharma, Alpha Financial Markets, Essential, and Learning Technologies be bid for. After a lost decade in UK small caps, a period that was punctuated by the Brexit vote, unstable politics, and UK exceptionalism, valuations remain deeply discounted, as evidenced by the unabating M&A the market is seeing. And as clumsy as the Labour government's first year in office has been, it's clear that they understand the need to incentivise investment-led growth. Their focus on deregulation in the financial sector and the resetting of our trading relationship with the EU is encouraging. Today, we see US exceptionalism being questioned, while we think UK exceptionalism is receding. Given how oversold UK small caps are, we don't think it will take much to get this flows-driven part of the market moving again, and we look forward to the year ahead with cautious optimism.